Hi, and welcome to this Thursday afternoon update. I'm Tom Bowley, Chief Market Strategist at EarningsBeats.com, and it is a pleasure to be back with all of the Stockcharts folks. It's been a little while, so I'm really happy to be back here. Before I get started with the charts and with the update, I do want to remind everyone that on Friday, tomorrow, we do have a big economic report coming out, personal income and spending. And within that report, the Fed watches the PCE core index quite closely. We are expecting only a 1% or 0.1% change in the core PCE month over month. Last month, we had a change of 0.2%. And on an annual basis, we're looking for that 2.8% annual core PCE from last month to actually drop this month to 2.6%. So that's going to be a number that the Fed's going to be watching really closely. And of course, as they fear and look at inflation and so forth, that's really dictating their policy. I think the stock market, bond market, both expecting that we're going to get some rate cuts later this year, at least one, maybe a couple. And so this is going to be a big report to watch on Friday morning. So I wanted to make sure that you're aware of that. All right, I'm going to jump into the charts, and I always like to start with a long term. And when I talk about long term, I mean big picture 100-year monthly chart of the S&P 500. And if you notice one thing about this chart, you just need to realize that it goes up from left to right. So those who are perma bears in the market, honestly, I don't know how it works over the long term, because the stock market over time does go higher. And I think this is a pretty good chart to kind of prove that point. Anyhow, currently, the way I'm looking at the market from a big picture perspective is that we remain in a secular bull market. So if you followed any of my work at Stockcharts or over at EarningsBeats, you know that throughout any of the prior cyclical bear markets or any corrections, any kind of downturns, I've maybe talked about the short term being a little bearish, but the long term has not changed. I believe we're in a secular bull market. I think as long as that monthly PPO remains above the center line, you can see when it goes below the center line, that's when we can confirm we are in secular bear markets. Otherwise, we remain in secular bull markets. Also keep an eye on the monthly RSI. When we're in the 40, when we hold 40 is on the low side, and then we break up into the 70s and 80s, when we're in that range, we are in a secular bull market. When we go into a secular bear market, you will see the monthly RSI drop back down to maybe the 30 level or even below that. So just keep that in mind. This is something that I like to share at least once a week with our members and with the Stockcharts community. I will be sharing this as we go forward, but just make sure that you understand we are in a secular bull market. That helps to drive a lot of the decisions in the short term, even when we're getting pullbacks. All right, next chart I wanted to bring up is the S&P 500. Now, keep in mind, we are recording this on a Thursday. It's live. The stock market currently is underway, so things can change. But right now, this is my look at a daily chart and what I've kind of been expecting with the S&P 500. Notice that even though we've started to struggle with the semiconductors, which is a large part of our major indices, the S&P 500 is still hovering up here near all-time highs, and that's because we're seeing money rotate. So even though semiconductors are getting hit, I'll talk about software in a little bit, but we had a breakout in software. We've seen another breakout in internet stocks. We're seeing money rotate, and that's a hallmark of secular bull markets. Anyway, here you can see prices moving higher on the S&P 500 on this daily chart. The PPO looks strong, going up with it, so bullish momentum continues. I've put a green arrow in here to mark the 20-day moving average. This is where during significant secular bull market advances, we can look for support. You can look back to the November to April period as a perfect example. Each time we went down to the 20-day moving average, we bounced, kept moving higher. So until that changes, that's what I would be using as my key support. Now, from a longer-term weekly perspective, you can see there's actually a negative divergence on the S&P 500. But before you go hitting the sell button, take a look at what happened back in 2021. As we kept moving higher and higher, we saw this PPO roll over, and we had negative divergences for several months before we actually saw some selling kick in. This is a secondary indicator. So yes, I'm aware that the negative divergence is out there, but we don't have it on the daily chart. We don't have it on the monthly chart. Monthly chart, the PPO on the monthly PPO is actually accelerating at this point and showing that bullish momentum is accelerating. So keep all of that in mind. So while this is a little bit of a warning sign, to me, it's a secondary indicator, and I'm not overly concerned with it. Moving on to the Nasdaq, I like to follow the S&P and the Nasdaq. Those are the two major indices, just because a lot of the stocks that I like to follow, a lot of the large cap tech names and all are pretty much captured within the Nasdaq 100. And then we also have a little bit more diversification by using the S&P 500. But here on the Nasdaq 100 daily chart, very similar, moving to new highs. We got higher PPO. We've pulled back, but so far holding that rising 20-day moving average, just as we did back in latter part of 2023 and then into 2024. Looking at this from a weekly chart, weekly standpoint, same thing as the S&P 500. We are starting to show negative divergence, but one thing that can happen is we could continue moving up and the PPO goes up, we could eliminate that negative divergence. So again, it's a little too early, a little premature to try and call market top based on one secondary indicator, but at least be aware of it. All right, moving on. I want to talk a little bit about sectors. So we're going to start off. I'm not pulling up a chart on technology, but technology has definitely struggled a little bit recently because semiconductors have topped. And I'll pull up a chart on the semiconductors in a little bit. But for now, I want to focus on the XLC because I want to look to areas that could take the baton from technology and lead this market to the upside, even if technology lags for a while. XLC is one of those sectors. We topped back in 2021 at about the 84 level. We hit that level back at the beginning of April, then we pulled back one more time, and now we have broken out the XLC on an absolute basis, making that 5-year breakout. I think that's bullish and is going to attract some additional money as we move forward. The consumer discretionary group, check out this triple top here. Double top back in March, and now we're there again here in late June. So this triple top, if we get the breakout, I'm going to go down here and show you, we've got on a relative basis, this bottom panel down here is the XLY relative to the S&P 500. It's been downtrending. 2024 has not been a good year for consumer discretionary, but as we see money rotate away from technology, this is an area I absolutely would be considering as it starts to turn higher. Now, right now, we're seeing a subtle move back to the upside in relative strength. We're at about a 6-week high, maybe a 5-week high in relative strength. But what I'm really paying attention to is this sideways consolidation, and I'm waiting for a breakout. So anything where we can break out, you see the XLY trading back up above, say, the 185 level, that would be a good sign. And I would expect on an absolute price breakout that we would begin to see relative strength pick up again. So this is a clear chart that I want to continue to follow. If you're looking for opportunities outside of semiconductors, I think you're going to find some of them here in consumer discretionary. Now, one thing I noted here is that you can use RRG charts. RRG charts are another great feature here at Stockcharts to allow you to visualize the relative strength in, it could be sectors versus the S&P 500. In this case, I'm going to show you an RRG of all the industry groups within the consumer discretionary group. So here's your RRG. And so I've got, 20 industry groups, however many there are, right here within the XLY. And so they're all moving here relative to the XLY. Now, remember, the XLY hasn't been performing great. So if you've got a leader within the XLY and then the XLY breaks out, those leaders are areas that you're going to want to pay maybe specific attention to. So what I've done is I've pulled up a 3-month daily chart. And I want to go back to the low that we saw back in April here. And then I'm just going to drag this forward. And you can see the movement in all of the industry groups relative to the XLY as we go through this 3-month period. Now, there's a lot of clutter in there, and it's really difficult to see exactly what's going on. But one cool feature here is if you go down below, I'm going to go ahead and put this over here. It'll give you the top groups, the groups that are in green right now, meaning that these are the groups that are in the leading index or leading quadrant, I should say. Right now, we've got automobiles, hotels, specialty retailers, and home improvement retailers. So what I can do is I can just click on the first one there, the automobiles, and now it highlights. And so I can go back over the last, 3 months or so and show you how the autos have traveled relative to the XLY or consumer discretionary. And you can see right there, autos absolutely just exploding there to the upside, coming back down, moving up, rotating back around, and now right now just accelerating into the leading quadrant. When I think autos, I think Tesla. I'm going to show you a chart of Tesla a little bit later in the show, but I want you to be aware of what's taking place here. Anyway, let's go back and take a look at these sectors. So there's the XLY. Here's the XLV. See that similar triple top? We're pulling back from it right now. Watch for a potential breakout there. XLP, consumer staples, we have a triple top in play. Now, this is a defensive group, but it's okay. We want all groups, even the defensive groups. We want to see them breaking out. We want wide participation in this bull market advance. So for those who are saying, oh no, defensive stocks, we don't want to see them do well. Yes, we do. We just don't want them to do well on a relative basis. But on an absolute basis, hey, let's break out. More the merrier. Moving on to energy. So energy is kind of interesting because the XLE has been falling in this channel for a while. But if we move forward to the crude oil prices, this downtrend has been broken and we're actually starting to trend higher. And we're about to get a golden cross on crude oil where the 20-day comes up from under the 50-day and crosses it. That's a bullish development. The PPO on a daily basis has pushed back above the zero line. That's another bullish development. Look at the break of this trend line and the volume that accompanied it. Another bullish development. So as we look at this, I want you to look at the correlation between, this is the XLE, and this is the XLE correlated with the crude oil price. And you can see that it remains in positive territory almost all the time. Right now, we went inverse temporarily, and now we're starting to correct it. And we've been correcting it because energy is starting to turn higher with crude oil prices. So if we go back, look at that crude oil price chart again, we've been uptrending since the beginning of June in crude oil prices. But if we look at energy, the XLE, we actually, throughout June, we were going down through the 17th. And it's only been since the 17th that we've turned back up. So now we're starting to get that positive correlation again. If we continue to move higher on the XLE, if we can get through about the 92 level and we see that PPO turn positive, that would start to make me feel a lot better that we are getting rotation that is positively impacting the energy space. So watch for that as well. All right, let's take a look at a couple of industry groups. I mentioned the semiconductors. Listen, since November, there's not been a better group out there. We have seen this group move higher. We've seen the SC Semiconductors, the industry group relative to the S&P 500, just absolutely scorching to the upside. And down here, I pulled up a rate of change, 170 days. Now, 170 days is roughly 8 months, 170 trading days. And if you look at this, you can see that right now we're over 100% on this particular chart. Now, if I go and I stretch this out over an extended period of time, so that's what I'm doing here. Now I'm going back 15 years with this rate of change of 170 days. And I want you to see where we are right now. We hit over, well, we're still sitting over 100% in 8 months. I mean, that's crazy. It's a crowded trade. We've seen over the last few years, we've gone above 80, and here back in 2023, maybe during maybe June, we got up to almost 100%. Back in the latter part, fourth quarter of 2020, you can see we reached over 80, maybe got to 85% or so. And once we got there, if you look at the relative strength, I mean, yeah, semiconductors kept going higher. But if you look at the relative strength, it really struggled here for about 10 months. So in other words, we weren't seeing the leadership from semiconductors after we got up to this, after we had one of these crazy moves. Fast forward, June 2023 did the same thing. Look at the relative strength. Even the absolute strength went sideways. Relative strength went sideways, and it wasn't until the October period, late October, that we made this breakout and had a huge run to the upside. So here we are again. Now we're over 100% in 8 months. I believe that we are probably going to be looking at some weakness here. Even if the absolute price action stays close to where we are, I think we're likely to weaken somewhat on a relative basis and bringing this rate of change down. That's what I would look for, which means we should be looking at what other areas could pick up. I mean, there's a lot of money in semiconductors. If that starts coming out, what other areas could be areas that maybe might make another run? Maybe it won't be quite as good as semiconductors, but could still be very strong. Software is one I would pay attention to. Software didn't participate when semiconductors were absolutely scorching to the upside. Look at this. We topped in February in software, went sideways, just made the breakout recently. You see stocks like Microsoft doing well. Some of the others, CrowdStrike, been doing well. Check out software. You're going to want to make sure you look into this group. Next up, internet. Internet was kind of going sideways here for the last couple of months. Just made a breakout. Google breaking to an all-time high. So got some stocks within the internet space that we want to take a look at as well. All right. If you like the way we approach things at EarningsBeats, just our, look from the top down, we do have a newsletter. It comes out on Mondays and Wednesdays, usually before the market opens. If you use your phone and scan the QR code on your screen, you can join our free newsletter. It's 100% free, no credit card, and you can follow along. I think there's a lot of valuable educational insights in there, as well as possible trading candidates that I think you would enjoy. So make sure you check that out. All right, let's move on. So next I want to go through and talk a little bit about the chart list that we keep at EarningsBeats. Now, I would say our flagship is our strong earnings chart list. And so think of it as a watch list. But what we do is we go through and we filter all these stocks for our members. And if I pull up the edit function here or the edit feature, you'll see 485 stocks are on this chart list. And these are companies that all beat their revenue estimates and their earnings estimates in the last quarter. They're all liquid. So we vet these to make sure that they have at least a couple 100,000 a day in volume. We don't want illiquid stocks on this chart list. And then also we make sure technically that we like something about the chart. Either the company itself is a great relative outperformer, or maybe it's a leader within a downtrending group. And if that group starts to come back up, then we have leaders on this chart list to highlight or possibly trade. Anyhow, this is the list. We keep it in chronological order. So this is the one furthest back, which is McCormick. So they reported 3 months ago. I think actually they may have just reported again this morning. So if we pull that chart up, you'll see here we had the gap up. That's when it got added. We had a great report with McCormick. It performed well. I try to annotate areas that I think we could see some support. So I look usually like on this one, top of gap support, bottom of gap support. In this case, it came down into the range, went back up again. Some will work better than others. But anyway, we did get another big gap up this morning, and I think that was because of earnings. I'd have to double check that, but I believe that they have reported earnings again. But if we go back to the latest, this would have been the last time I updated. I actually updated on June 18th. That was the time that this chart list was updated last. So here was Lazy Boy, which had gapped up with earnings. It's pulling back. It's lost a couple of key support levels, but just now getting close to the 20-day moving average. Maybe that holds. If not, then we could even look at the bottom of gap support. My guess, though, I would expect for that 20-day moving average to hold here. But we could go back through the list. I did have one or two that I wanted to just point out real quick that just looked interesting to me. So let's pull up. Let's see here which ones I had on the list. BIRK, I thought was an interesting one. So this is Birkenstock holding. If you scroll down here, I've got relative strength. It's within the footwear group. Footwear has been trending up a little bit, although if you come down to footwear relative to the S&P, you can see it's not been that great. But Birkenstock here has been trending higher relative to the footwear group. So it's at a 52-week high. And the reason I like it is after earnings came out, it went down to about the 54 level. And then all of a sudden the buyers came in. That's where the tail ended. And then we started going back up. Now we've actually gapped back down, and we've gone all the way back down to where the buyers kicked in back at the end of May. This is where I would at least start thinking that maybe, hey, we get a recovery. Stock's at 54. If it gets back to its recent high of 62, we're talking about more than a 15% or roughly a 15% move back to the upside. So at EarningsBeats, we always talk about better timing, better trades. And this is really what we're talking about. Getting stocks on pullbacks at support or closer to support levels to increase that reward to risk ratio. So anyway, those are some of the charts there. I did also want to do a 3 you must see. So in this, I'm calling it tag you're it, because if you think about rotation, it's like, okay, we had NVIDIA, we had all those semiconductor stocks leading for such a long time, and now they're tagging some other stocks and saying, hey, you're it. We've done our job. Now we need somebody else to carry the market for a while. Well, 3 stocks that I think look like they could be poised to get things started. Of these 3, I would say Tesla. I'm going to show you this one first. This is maybe the one that's a little bit, we've seen some false move to the upside and then fall back. And you can see we're still in a downtrend. I've drawn a couple of key resistance levels on Tesla. One we took out yesterday as volume expanded, so that was a good sign. You can see that the daily PPO right now is probably as strong as at any time since back at the end of 2023. So I would say right now, Tesla looks the best it's looked in 2024. That doesn't guarantee us anything. Doesn't mean Tesla is going to go flying from here, but it is definitely a stock I would keep on my radar if I didn't already own it, because the breakout here was the first step. I think this key gap resistance, you can see the gap down in the heavy volume. We've never been able to get back up through about the 208 level. So that's still one more level that we're watching for there. But I do like the relative, or I do like that move there in the PPO, and then also the AD line. Even though we've been in this downtrend for a while, I mean, if you look at where, say we were at this low, where the AD line was at the end of October, and where we are now, even though price action's the same, there's actually been accumulation in Tesla, I believe, even though price action hasn't followed suit. I mean, we know discretionary stocks haven't done as well. Tesla has kind of been the poster child of that, but I am starting to see some strength, and they usually run into earnings. And this is the end of June. They report in July. This could be the start of a significant push to the upside. Just want to point it out. The next 2 I really like, though. Amazon making a big breakout yesterday. Sideways consolidation. We had an ascending triangle, a beautiful ascending triangle in play. A, B, C, D, E pattern. A is your first high. B is the initial low. C is the next equal high. D is the higher low. And then E is when you come back up and you make the breakout. Look at the breakout. Look at the volume expanding. PPO coming off the center line, pointing straight up, meaning that our momentum is accelerating, and AD line moving to new highs recently. So I see Amazon as a stock. I believe we're going up probably to 210, 220 here over the fairly near term. I think that's going to lift the XLY. It is the largest holding in the XLY. In fact, Tesla and Amazon together make up 37% of the XLY. Last stock I have for you here is Google, or Alphabet. Again, we gapped up with earnings, kind of went sideways here for a little while, had those lows that just kept rising above the 20-day moving average. And now we've gotten the breakout, and you can see volume has picked up on this uptrend. I think Google could be another leader along with Amazon. So I still think there's going to be some focus on the Mag 7 as we go forward. I just don't know if it's going to be semiconductors leading it because of some of those charts I showed you. It's just a crowded trade. So that's all I've got for you today. I do want to give you, as we exit, a way to keep up with us at EarningsBeats. So again, got another slide here. If you scan the QR code on your screen, you'll be able to come to a landing page, and that'll explain how you can follow us in various areas where, I write over at Stockcharts. I do shows over at YouTube, other shows over at YouTube. And of course, if you'd like to become a member over at EarningsBeats. So make sure you scan those codes. All right, that's a wrap for all the technical stuff today. I do want to end the show maybe on a little bit more somber note. It's been a really sad last few weeks here at Stockcharts, in our Stockcharts community. We lost one of our colleagues, Greg Schnell, who passed on June 6th. Greg was a great technician. Of course, many of you followed his work here at Stockcharts, where he had Canadian Technician blog. He covered a lot of stocks up in Canada, the natural resources, many energy, materials names. We have a huge following here at Stockcharts from our Canadian friends. And so many of them I know followed Greg's work, as did folks from around the globe. He was quite a technician. We met back in 2011. We became great friends immediately. I mean, if you ever met Greg, you know his infectious personality, always with a smile, loved meeting people, loved listening to everyone's story. I met Greg back in 2011 at ChartCon. 3 months later, I was in Calgary speaking to his group, Canadian Society of Technical Analysts. We just hit it off that quickly. Visited his home in Phoenix. We actually went to the Waste Management Open. That was several years ago. Just had a great time, spending time with him and his wife, Cherry. All of our prayers certainly go out to Cherry, to Greg's two girls, Dana and Kaylin. What's interesting about my relationship with Greg is I realized after we were friends, number one, we were born the same year, 1961. Both of our kids were born in the same years, 1993 and 1995. We shared similar passions with the stock market, with golf, with family. And again, his personality was so big. I've got such great memories of him. Just an absolutely great human being, wonderful father, great husband, awesome family man. Always, we would talk about families, and I know what Greg was all about. And those of you that were fortunate enough to meet Greg know exactly what I'm talking about. We lost a great man. We lost a great friend. I lost a great friend. I'll never forget the memories that we shared. Rest in peace, my friend.